All right, it doesn't appear to me that Mr. Deaver is on a telephone, just based on my view of him through the video. So here's what we're going to do. We need to go ahead and get started with this morning's staff conference. I would like for the public staff to pull this agenda item, coordinate with Mr. Deaver so that he's able to connect with us, and we will reschedule this matter to be heard at a later date. All right, with that, we will begin. Let's see. Good morning. Let's come to order and go on the record, please. I'm Charlotte Mitchell, Chair of the Utilities Commission. With me this morning are the following commissioners. When I announce your name, please indicate your presence. Commissioner Tanola D. Brown-Bland.
Good morning. I'm present.
Commissioner Gray.
Good morning.
Commissioner Clodfelter.
Yes, good morning.
Commissioner Duffley.
Good morning.
Commissioner Hughes.
Good morning, President.
And Commissioner McKissick.
Good morning, President.
All right, in compliance with the State Government Ethics Act, I remind members of the Commission of their duty to avoid conflicts of interest and inquire as to whether any member of the Commission has a known conflict of interest with respect to matters coming before us this morning. All right, the record will reflect that no conflicts have been identified. So we will proceed. Public staff, item P1, Mr. Franklin.
Yes. Okay. Item P1. Having a little trouble with the video start. All right, item P1. I'm sorry.
It's okay.
A&D Water Services Incorporated in the town of Rosman filed an application with the commission seeking authority to transfer A&D's water and wastewater utility services for the Sapphire Lake subdivision to the town of Rosman, which is exempt from commission regulation. The transfer, however, closed on July 31st, 2020, and the town has been billing customers since August 1st, 2020. A&D's commission-approved water and wastewater rates and the town's water and wastewater rates and impact to customers are as shown in the agenda item. The public staff has provided a proposed order and is in agreement with the changes made by the commission staff. The public staff recommends that the commission issue the proposed order requiring customer notice, specifying that the matter may be determined without public hearing if no significant protests are received subsequent to customer notice. Our plan was to have Mr. Deaver on the call so that he could answer any questions in addition to myself that the commission may have. However, as you know, he was unable to participate today.
All right, thank you, Mr. Franklin. In light of the technical difficulties we are experiencing in connecting Mr. Deaver to this video conference, we will pull this agenda item and schedule it for a later date.
Okay.
All right, hearing no objection, that the item P1 has been pulled, and we will reschedule the matter to be heard at a later date, and we will proceed with our next item, which brings us to docket number W354 sub 364A. Ms. Castleberry and Mr. Henry, we are with you.
Madam Chair, this is Gina Holt, Public Staff Legal Division. I'd also like to add that there are a few other members of the public staff who might want to weigh in on this item should the commission have additional questions. And that would be Public Staff Engineer Lindsay Darden, the Public Staff Engineer Chuck Junis, and Mr. David Furr, who's the Director of the Water, Sewer, and Telephone Division. Thank you.
Okay, thank you, Ms. Holt. If you would, please present the item for us, and then we will, then I will open the floor for questions or responses from the public staff as well as from the applicant.
Present the item.
Yes, ma'am. Present the item.
The public staff is here this morning pursuant to the request of the commission to respond to the commission's questions, which were filed on November 3rd, 2020. And the public staff, the company reviewed, filed for approval of the WISC and CISC mechanism on July 31st, 2020, pursuant to North Carolina General Statute 62-133-12 and Commission Rules R739 and R1026. The public staff reviewed the items submitted by the company for WISC and CISC approval, and with the exception of most of the items presented by the company, the public staff removed what it deemed to be non-eligible water and sewer system improvement projects. The public staff discussed these adjustments with Carolina Water, and they agreed with most, although they disagreed that certain plant costs excluded from the WISC and CISC adjustment by the public staff should be considered ineligible based on the public staff's determination that these items were routine and not the part of a project. So here we are to address the commission's questions.
All right, thank you, Ms. Holt. As you indicated, the commission issued an order on November 3rd, 2020 in this docket requesting additional information from both the public staff and from Carolina Water Service, the applicant. The commission has received responses that have been filed from both of those parties filed in this docket. Today, we will allow the public staff an opportunity to respond to or provide any additional information for the commission's consideration respond to the company's responses provided to the questions, or provide the commission with any additional information necessary. And following hearing from the public staff, I'll allow the company to provide a response as well. So with that, Ms. Holt, I'll ask that you allow anyone on the public staff wishing to provide a response to do so at this time.
The public staff offers a response from public staff engineer Gina Castleberry, Winley Henry, or Lindsay Darden at this point.
I'll start us off. As Gina had said before, we submitted.
Let me interrupt you. Just introduce yourself for purposes of the record, please, ma'am.
Lindsay Darden, engineer with the Public Staff Water Division. And again, we filed our responses on Friday. If you have any specific questions, please feel free to ask. As a summary, I think the discrepancy between the public staff and Carolina Water has been on a bucket item of as we said in our response, calling them blanket or routine replacement projects. And just as background for how this application has gone, originally Carolina Water submitted 6 projects for our review, and then a general ledger with approximately 497 invoices to be submitted as their application. Public staff reviewed the 6 projects, which they also included about a little less than 400 invoices for those 6 projects. And we met with the company to discuss our review and to move forward. We had told the company that we couldn't review the general ledger item, the 497 invoices, and that we would need more background information, and asked them to submit any projects they had from that general ledger. And once they were able to submit them as projects and give them the background information that we needed so we could determine if they met the statute, then we were able to review those and incorporate them into the WIF that calculations done by Accountant Henry. And so they then came back and they submitted 5 projects, and then came back again and submitted another 44 projects that were reviewed by the public staff. The public staff reviewed all these projects, and there were 2 projects that we deemed not to fit the statute, and Carolina Water agreed on our recommendation for that. So we moved on from there with our recommendation, and we see the disputed items as more of a emergency response type invoice that they would have submitted. These are types of projects that need to be addressed. They would fall more into the maintenance and repair category for rate recovery, and they were not initially included in our recommendation because we were, again, without the background information, we could not verify and scrutinize these projects with the level that we scrutinize the other projects for these types of applications. And also, having been recovery possible in maintenance and repair, that takes away from the intention of the WSIC of trying to be able to expedite and incentivize projects for the customers that would improve their system and not necessarily just be a response to a replacement or a failure.
All right, thank you, Ms. Darden. Any other remarks from the public staff? Any questions from commissioners for the public staff? All right, hearing none, we will hear from the company. Ms. Sanford, I see you on.
Chair Mitchell.
Yes, ma'am.
Commissioner Hughes had his hand up.
Okay. If you have a question for me, just please indicate by calling out. I'm unable to see everyone on my screen, so please just let me know if you have a question. Commissioner Hughes, you may proceed.
Yes, I was just curious if the public staff consider the impact on rate base at all as a criteria in these projects. I'm hearing a lot of replacement projects, and was there any analysis of the assets that were being replaced, whether they had already been fully depreciated or whether they were they still had depreciable value? I was just curious if that was a criteria or that was included at all in the analysis.
We did not do an analysis of the items that were removed from rate base. We assumed that they were fully depreciated at the time that they were replaced. Lots of these were items that were repairs. So once the company pulled them from or replaced the items with a serviceable item, they should have taken them out of rate base at that time.
Okay, thank you.
Additional questions from commissioners? Okay, hearing none, Ms. Sanford, we will proceed with remarks from the company.
Thank you, Chair Mitchell, members of the commission, and colleagues at the public staff. I'll go quickly through my part, and then we'll turn this over to Mr. DeStefano. We really appreciate the opportunity to have this conversation before the commission. And as we all recognize, this is different. Our practice has been thus far, I believe pretty consistently since 2013 in the adoption of the Act, to negotiate and resolve issues with public staff and to bring to the commission packages which were, I think, subject to check, which reflected agreement between the parties on everything that we brought to you. What is different about this is that we have been able to agree, as always, with the public staff on a number of the items. But with respect to the application of the statute to some of the items that the company seeks to have reflected in their WISC order in this case, we don't agree. We simply have a difference in our views as to what the plain meaning of the statute is. So it's a great pleasure to be before the commission, and particularly in this kind of forum, to just be able to talk about these issues, supplemented by filings and subject to whatever kind of proceeding the commission wants to have. We really appreciate this conversational opportunity today. If follow-up answers are useful, of course, we're willing to provide that, eager to do so. And finally, we're prepared to speak today to another item that's a little unusual. We have asked for effective date of these rates for as of October the 1st. That's a little more complicated, we realize, or probably looks a little more complicated with respect to the time delay between there and now. We still request implementation of whatever rates you should order on October 1st, and are prepared to speak to how that would be done operationally. And when I say we, I mean Mr. DeStefano, who I'm going to introduce at this point. He is head of director of financial planning and analysis for Carolina Water Service, North Carolina. Also on as a participant is Bryce Mendenhall, who's the vice president of operations for North Carolina, South Carolina, and Tennessee, actually, and my colleague, Bob Bennett. So with that, I will turn our response over to Mr. DeStefano. Thank you.
All right, thank you, Ms. Sanford. Mr. DeStefano, you may proceed.
Thank you and good morning. I think Ms. Sanford kind of summarized.
Mr. DeStefano, just before you begin, introduce yourself for purposes of the record.
Certainly, thank you. This is Dante DeStefano, Director of Financial Planning and Analysis for Carolina Water Service. And again, I think Ms. Sanford kind of covered our main point. I think our main point is we're guided in these filings by the statute and the rules that are in place. And I think based on that information, the activity that we've filed for, or that we're requesting recovery at this point, and we are requesting recovery of what's covered by the statute. I agree. I would agree with Ms. Darden that we have had conversations. Discovery was asked. We responded to discovery. The company supplied all invoices that were requested for recovery and ledger detail immediately to public staff after filing was done within the next business day. We responded to discovery in early September and had conversations in mid-September with staff to discuss their position and review. And that's pretty normal, again, for the course of what we usually do. But the company is asking for recovery of these activities because they are, again, eligible. They meet the straightforward definitions that are available. They are, again, reasonably prudent activities. I don't believe staff disagrees with that as well. And activities that improve our system and improve our service to customers. Thank you.
And Chair Mitchell, Mr. DeStefano is certainly available to discuss our responses to the questions that you posed specifically to the company. We filed a written response on Friday, as did the public staff, but we're certainly available to elaborate or respond to any questions about them, as well as any other questions the commission has.
All right, thank you, Ms. Sanford. Thank you, Mr. DeStefano. All right, I will pause here to see if any member of the commission has questions for the company. Mr. Platzhalter, I see your hand is up.
Thank you. Mr. DeStefano, Ms. Sanford, I'm not particular about who the answer comes from. I took a look back at the company's 3-year WISC and CISC plan that was filed on May 28th of this year. And there are 3 items listed in the plan that appear to cover the types of activities that you're now in dispute with public staff about. There was no objection to that 3-year plan that at least came to the commission's level. Did you get any objection to those categories from the public staff when you filed the plan?
Dante, you go ahead, and then I'm going to ask Mr. DeStefano to go first, and then I'll fill in as necessary.
Sure. No, as the company files that plan every May, and the company generally includes, again, budgeted plan type activity, and I think that's the norm and the expectation from public staff as well. I'm not aware of any response from staff, follow-up questions or concerns or anything like that that was raised after the filing.
Well, as I say, nothing came to the level of the commission's attention, so I just wanted to know that. I do have a detailed question for you about it. The estimates for you've got three categories in there, one water category and two sewer categories that are called various items, but they appear to describe the types of activities that are currently in dispute here. For 2020, the plan showed the estimated expenditure on these type of replacements for the water on the water side to be about $100,000, and for the two sewer categories under the statute about $150,000. So we're now talking about something north of $430,000 that's at issue. Can you talk to me a little bit about the variance from your estimates in the plan? What accounts for the variance? I understand the plan is an estimate. I just want to know what caused the estimate to be different from the actual.
Yeah, and I think again, one of the biggest things is really just the unplanned nature of these and what we end up coming across, and that can change from at any point. We do budget for this type of activity, for unplanned activity, because we know it does occur in the normal course. So there is those type of variances. There also is a likelihood that what we included in the filing included maybe a bit broader scope of these types of general replacement activities across water and sewer than we had initially anticipated or included in that number. So still a similar type of activity where it's a one-off replacement or an as-needed basis type replacement, but a broader scope of types of assets that we're talking about here. Pumps, motors. Some of these things can be more expensive than others as well.
So say a bit. I understand you. Thank you. But say a bit more about what you mean by broader scope.
I apologize. I don't actually have that copy in front of me, so I'm not sure what the terminology was. But I think it talks about just kind of various, system replacements. Kind of blanket system replacements, I guess could be the term. So there's multiple criteria in the rule or in the eligibility criteria for the statute as far as meters, hydrants, and things like that. At some of those areas we don't have a lot of activity in generally, but we did have activity this time. Meters, meter boxes, service line replacements, gravity main and lateral replacements. Those are pretty normal. We did have hydrant replacements that occurred in this filing. I think it was at least $15,000 for that, and we had some other activities on the pumps, motors, and blowers criteria for the sewer side. That's probably a little bit more than we usually see, or more expensive than we usually see.
Thank you. In prior filings, I know you update your plan, your WISC plan annually. You've carried this category of expenditures in prior plans, have you?
I'm looking back at
described in the plan as various.
Right, exactly.
Yeah, and then, but you had that kind of categorization in prior plans?
We have it in our capital budgets internally. As far as the filings, the 3-year plans that have been filed, I don't believe historically we have included them. At least not consistently in my recollection and what I've reviewed. We generally stick with the more planned activities as opposed to the unplanned various bucket in those filings.
This was the first year you put that kind of category in the plan.
We did. We thought it was relevant to put it in as a broader scope of what we deemed eligible.
Okay. Thank you. That's
Sure.
All the questions I have. Thank you.
Thank you.
Chair Mitchell,
Yes, ma'am. Commissioner Brown Bland.
I have some questions. So, Mr. DeStefano, to follow up and to be clear for the record, it's my understanding that the public staff has stated that the projects that are in dispute would not have been in the company's 3-year WISC plan. Is that right? Does the company agree with that?
Yes, as I think I just mentioned with Commissioner Clodfelder, yeah, generally those types aren't included. And I'm not sure what other companies do, but just speaking for our company, we historically have not included that group, again, because I believe the focus, or at least again our understanding of the focus of that filing, is more on the planned side. So I guess these kind of straddle the fences to planned or not planned. They're anticipated. We budget for them because this activity does happen, but they're not necessarily planned, in advance type activities as many of our other capital projects are.
Okay, thank you. And does the company have, even though we didn't direct this question straight to Carolina Water, but we asked the public staff, but what is the company's position on that first question put to the public staff about the difference between these improvement, routine non-project, and single service connection projects versus those that the public staff sees as meeting the definition of the statute?
That's something that I think we're maybe, to be honest, still struggling with, making sure we understand the position. Historically, I guess, and some of it comes around to definitions. It comes around to what a project is, what does routine mean, what's not routine, and those kind of things. I'm not clear from reading that response, or as much as I can comment on it, because I know there's comments about a separate proceeding that we weren't party of in that response. But as far as the criteria that staff is using to segregate between routine and non-routine and things like that, to me is still unclear. For example, we included an AMR replacement, full subdivision replacement in this filing for our Sugar Mountain subdivision. In the company's most recent base rate case, when we asked for deferred accounting of 2 AMR projects, very, very similar to this, I believe staff claimed that those were routine activities, that meter replacement or system meter replacements happen frequently, and we had done several AMR meter replacement projects, system-wide projects like that. And however, that staff did not dispute recovery of that AMR project in this proceeding. So that's just an example. There's other kind of emergency basis or as needed basis activities that we did have in this filing, and after discussion with staff, I believe are included in their position, such as gravity main that collapsed and was replaced, manholes that had a root intrusion, as I mentioned, hydrant replacements and things like that. So again, I think we're still kind of working our way through a consistent explanation or interpretation.
Chair Mitchell. Oh, I'm sorry. I think I interrupted. Excuse me.
Yes, and I was going to direct my next question either to Mr. DeStefano or council may step in. But in general, you've now seen the full response of the public staff. Do you have any specific responses to anything you saw there? And at least something that I was interested in is the statement that if all these types of what the public staff views as routine matters are allowed to be in the WISC and CIS, that removes room for the capital investment expenditures, and also that these routine replacements are already being recovered for in existing rates.
Sure. So definitely a few things to say in that to that effect. So as far as the materiality consideration, I was again a little confused by staff's responses, where there was a comment that the regulatory lag impact would be very minimal, but that these would also eat into the 5% cap in a way that would disincentivize other capital project activities. So I was trying to reconcile that first. Again, this is not the focus of our capital project, our capital plan, our capital budgeting. We do focus on, the project level, the planned activity, and this activity is just accounted for as kind of normal course activity. And we do try to minimize it as much as possible, so that we have more planned and structured capital spending. Beyond that, as far as the rate-based consideration, I think Commissioner Hughes asked about, and Mr. Henry, I would agree with what Mr. Henry said, where the activities or the assets being replaced by these investments are generally fully depreciated. They're at the end of their life. That's why they've shown failure issues or other problems. So to that effect, if it's a fully depreciated item, it is effectively zero rate base. So what would be replacing it would be that incremental rate base, that incremental investment for which the statute allows recovery. So there's really not a net effect or anything like that, or it's certainly nothing material that would affect the previous recovery. And these activities that we're requesting here are also not were not activities that were done during the rate case or recovered directly during the rate case as well. So that's definitely not the case.
All right. Did council have anything to add with regard to the specific, the overall response of the public staff? Anything that you wanted to take on specifically?
Thank you. This is Joanne Sanford. I think the comment that I would like to make is the following. What we've brought before you here reflects an evolution in the company's interpretation of and attempts to apply this statute. And I think that's pretty clear. And I want to be clear that what we're doing here is different. It is not extraordinarily so. It's not some huge departure, but it is simply bringing to you something that we were able to resolve internally before because different negotiated decisions were made. We're mindful, we believe, I'm certainly not trying to put words in this commission's mouth, but well, let me just say that the company recognizes that it has needed to take a firmer, more careful look at the WISC statute to be sure that we are using it appropriately, but also that we are using it to accomplish any of the legitimate means that the plain language supports. So that is an explanation of these issues that we're down to with respect to the public staff, which takes a view, which is the one that has been followed in practice in terms of what's been presented to the commission, the view that the more simple, the more ordinary, more routine, more looks like a project, however, that is actually ultimately defined, kinds of investments are the ones that have been easier to handle and have managed to meet the needs that the company's brought forth earlier. What we're now doing is taking just another hard look at this statute and believe that the language of it and the necessity for the company in terms of its operation and cost recovery supports this attempt to expand it to some items that are not of the sort that we brought to you before. So that would be my comment, general in nature, Commissioner Brown-Bland, and not terribly responsive to your request for a specific response from to the public staff's filing.
You've answered my question, Chair Mitchell. If I think public staff may have some comment, but at the appropriate time, I'm ready to make a motion.
All right, I see Mr. Bennick. Mr. Bennick's hand is up. I'm going to allow him to respond, assuming it's a follow-up to Ms. Sanford's comments. So, Mr. Bennick, why don't you proceed, and then we will recognize Mr. Junis for an opportunity.
Thank you. Just briefly, looking at page 3 of the public staff's response to question 1, they discuss in significant detail the description of blanket and routine replacements that were discussed in the context of the Aqua case. And one point I want to make is that in that case, the issue about which these projects were being discussed was one of a request for deferral accounting. It was not for WISC project or investment purposes. So the issue was deferral accounting and the mitigation of regulatory lag in that case. And as you know, another point there is that the WISC statute, one of the purposes is to mitigate regulatory lag. But again, the issue in the Aqua case was not whether those blanket replacements were eligible for WISC cost recovery. And in terms of going back to maybe a question that Commissioner Hughes asked, and I think it comes into what Commissioner Brown-Bland was also asking, I want to point out that we're talking about that the statute in subsections C1 and D4 specifically authorizes in-kind replacements. And so when you allow in-kind replacements, that raises issues of depreciation and whether those investments that were being replaced were fully depreciated has not been an issue in a WIS-CIS case that I'm aware of. That would come up in the context of a follow-up rate case, I suppose. But again, the point is that the statute in at least two specific instances allows in-kind replacements, and that is at least certainly in part what we're talking about today. That's all. Thank you.
All right, thank you, Mr. Bennett. All right, Mr. Junis, your hand is up. I'll let you proceed, and then we'll give the company a chance to respond if necessary to Mr. Junis's remarks.
Chair Mitchell, I have a question as well when it's appropriate.
All right, let's let Mr. Junis, why don't you proceed? Your hand has been up for a moment, so you may proceed,
Okay.
and I'll take questions from commissioners.
Thank you. Can everybody hear me? All right, perfect. My name is Charles Junis. I'm an engineer with the Public Staff Water Division. I just want to provide some clarification on a number of comments that have been made this morning. So thank you, Chair Mitchell. Number one, I think to hit on the most recent comment by Mr. Bennett, there's a key similarity between deferred accounting and WIS-CIC in that those are special rate making tools before this commission that are primarily used to impact or address regulatory lag. So they are very similar in nature with the exception of how they truly function. And I think it's important to note on that page 3 of that response that these assets are primarily in replacement of assets already in the asset base and therefore being recovered in current rates. Recovery and deferred accounting would be duplicative. So these assets have been excluded from the deferred accounting request. That would be very similar to if you replaced deferred accounting with WIS-CIC treatment, that these are already in rates, they're being recovered, depending on where they are in depreciation changes the impact, but they're still in rates. And that also gets to an important issue here in that all these nearly 500 lower cost items that we have excluded here, it is very unclear outside of a rate case, would these be in an O&M budget as an expense, or would these be capitalized in certain circumstances? From my experience with Aqua, you may go out to a leak and it may start out as a repair and be an expense item, and then you realize that the problem's a lot bigger. You're going to replace a couple of sticks of pipe or a couple 100 feet, and then all of a sudden that becomes a capital item instead of I'm going to put a collar on it and fix a leak. So it becomes very troubling, especially with the volume that Carolina Water's trying to include here, a true and proper scrutiny that was supposed to be emphasized in the WIS-CIC. So I think that becomes troublesome. And I think some key comments by Mr. DeStefano, he referred to these expenditures as unplanned, normal course of business. Those are not the system, the key word, system improvements that were intended to be accelerated by the WIS-CIC. It's in the statute. It says system improvements. And it also, I think a key comment, before you get into the specific items, Part B states, shall include only those improvements found necessary by the commission to enable safe, reliable, efficient service. And so does a replacement of a service line for one customer, is that a system improvement necessary to provide safe and reliable service and efficient service? I wouldn't necessarily characterize that as a system improvement. That helps one customer, but again, that's a repair that was unplanned and necessitated only by a failure, as opposed to a project that would have, under the circumstances before WIS, perhaps been deferred until closer to a rate case, perhaps a year, 2, or more, and instead should be being accelerated to happen sooner when the need is there immediately. And by using up, and he referred to it as normal course, a third of this request before you is apparently unplanned, normal course of business, essentially repairs and maintenance. That is not, again, I will repeat because I think it's very important, that is not system improvements being accelerated in a capital spending plan. And I think that hits all the points I wanted to make. I just think that that is very important for this commission to consider. Thank you.
All right, thank you, Mr. Junis. Ms. Sanford, Mr. Bennick, response to Mr. Junis's comments.
Let's see, I'm unmuted. I'm gonna, with the chair's permission, I'd like to ask Mr. DeStefano if he wants to respond.
Certainly. I guess a couple things here. One piece that I would definitely, and I definitely respect and appreciate Mr. Junis's points. The first item that he identified was the difference between deferred accounting and WISC, saying that they're fundamentally the same as far as addressing regulatory lag. That is true. They do address regulatory lag. Major difference here is the WISC has statute and rules that support it, and deferred accounting is at the commission's discretion. That's a big difference. The O&M versus CapEx consideration, again, this gets looked at in every single rate case we file as the staff audits our records and what we have in CapEx versus O&M. We've only included in here items that are legitimately CapEx. They're replacing service lines, replacing meters, replacing meter boxes. We're not including, and we weed out, if there are any mispostings in our records, we weed out things like clamps on service lines, on mains, and things like that. We take great effort to minimize what we're sending and any superfluous activity, avoiding that going to staff to make their process as easy as possible on their side to review. And when we come to system improvements or something affecting more than one customer, there's items that are included in this group that are being disputed by staff, such as gravity main repairs or gravity main replacements, water main replacements for leaks. These are things that definitely affect more than one customer. They are impacting the flow of water and sewer to and from our customers and affect multiple customers. You know, I think I don't want to have to get bogged down into semantics with it, but when we're talking about system improvements, the company's talking about improving the system, the water and sewer that provides service to our customers, whether it's one customer, 10 customers, or 100 customers. It's providing proper service, and we're required to provide proper and adequate service to all of our customers.
Thank you, Mr. DeStefano. And to the commission, I would just follow up by saying it would be the company's position here. I guess you could carry this to an extreme, but it is the company's position here that these investments are for the purpose of ensuring safe and reliable service in accordance with the statutory requirement.
All right, Ms. Darden, is that your hand up?
Let me unmute. I just, if I can, wanted to make a quick clarification. I know that a lot of the talks have been talks about these routine replacements and this extra $433,000 that the company has asked for. And I just wanted to clarify and make sure it was totally clear that the public staff did take into account a portion of those projects. That's what the meetings with the company was. We had told them, if you can provide the documentation and you can provide the support and you can single out these as projects, we would be happy to review, see if they're eligible, and then we can have conversations about them being included. So there was about $200,000 that the public staff did add in to addition to the 6 projects that were originally submitted by the company. So I just wanted to, in abundance of caution, show that we're not just flat out against these types of projects. They just we need to be able to consider them and be able to review them before just incorporating them into that as the bucket.
All right, thank you, Ms. Darden. Any response from the company to Ms. Darden's comments?
Yes, this is Mr. DeStefano. And the company definitely, I want to definitely say, if we haven't already, that we definitely appreciate staff's efforts to work with us, do the review process, and go over their position on things. Mr. Arden is correct. We did supply or did have a conversation and directed them to certain information that we had filed that we felt was eligible after our conversation. There was, however, this information that we're discussing here today, where we disagree, we were told in that conversation not to, or that it was not going to be deemed eligible. So we did not focus the continuation of the process with staff on those items. Staff had made their point clear to the company. But we do want to say that we do appreciate staff working with us on looking at the broader scope of what we filed and including a number of items that may not have been included in prior filings.
All right, thank you, Mr. DeStefano. All right,
Chair Mitchell, Ms. Castleberry has her hand up.
Ms. Castleberry, you may proceed.
Yes, I just wanted to clarify.
Ms. Castleberry.
Projects of the invoices that they sent to us, and the ones that we decided that were a repair, clearly on the invoice said that they were a repair, and they were for service lines such that their company replaced maybe 1 foot of service line, maybe 3 feet of service line. So it's not that they replaced the whole service line. They went in there and said in the invoice that there was a leak on the service line, and they repaired 1, 2, 3, several feet on the invoice. And those are the types of invoices that we decided fell under routine maintenance and repair as a leak and not as a project or replacing a service line. And I just want to clarify, those are the ones that we decided fell under the definition of a repair and not replacing an entire service line or a portion of the main or things along that line. It was clearly, even on the invoice, said it was a repair.
All right, any response by the company to Ms. Castleberry?
I think I would just say that on the invoice side, we can't control what our vendors put on the invoice or how they decide to use the terminology. Obviously, we're getting hung up on a lot of terminology here. So I would say that's one piece of it. I think from the descriptions that are on the invoices as far as what was replaced and what was addressed, what was taken out, and a new asset that was put in service, I think it's clear, what could be capitalized here, what was actually done from the invoice. I think there's sufficient detail in the invoices.
Chair Mitchell, I would move that this item be taken to the executive session of the commission.
Second. All right, we've got a motion and a second that this item be taken into executive conference. Any additional questions or discussion? Commissioner Hughes, you're on mute.
Yeah, I had a few follow-up questions. If I can proceed.
You may.
This is a follow-up somewhat to Commissioner Klinefelter's question about what was the big variation, but it also follows up on some of the most recent discussion related to specifically to the service lines. My quick read of the difference in the plan is that service lines do seem to have cost a lot more this time around than was predicted. And I'm intrigued by the comment that like 2 feet of service lines would get capitalized. Is that the typical procedure for how it's been done in the past?
Well, the company hasn't changed any of its capitalization policy or anything like that, as far as I'm aware. And again, I think someone else had mentioned it earlier today as well. When there is a leak on a line or a broken line or a collapsed line, if it's not prudent to replace the entire line, a section of the line will get replaced, and it may be 10 feet, 20 feet, 5 feet. The same thing can happen with a main. If it's something where it just needs to be clamped, and there's no actual cutting and replacing of any main, that's usually an O&M item. So where there is an actual replacement that takes effect, a piece of main or piece of service line is taken out of service and a new piece is put in and connected to either end, that's treated as a capital item.
Okay, that's all for now. Thanks.
Additional questions or discussion before I call the vote? All right, hearing none, I'll call the roll for a vote. Indicate your support for the motion by saying aye, opposition by saying no. Commissioner Brown Bland.
Aye.
Commissioner Gray,
Aye.
Commissioner Clodfelter,
Aye.
Commissioner Duffley,
Aye.
Commissioner Hughes,
Aye.
Commissioner McKissick, Commissioner McKissick. I believe Commissioner McKissick is an aye, and I support the motion as well, and the motion carries.
Yeah.
Okay. We have our minutes of November 2nd, 2020 for approval.
Move approval.
Second.
All right,
Second.
we've got a motion and a second that the minutes of November 2nd, 2020 be approved. All in favor indicate by saying aye.
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 Any opposed? And our minutes of November 2nd are approved. All right, is there any additional business for the commission this morning? All right, hearing none, we will be adjourned. Thank you very much.